CATCHIMPIPS. I've been CATCHIMPIPS. I've been.
Hey, it's your man Charlie P. Today we are going over learning how to read a chart. This is the exact chart that I use. I'm going to break down everything on it. So definitely want to pay attention because the things that are on the charts are going to help you analyze the markets in the way that you need to analyze them so that you know when to get into a trade or when to sit on your hands and not get in a trade. So anyway, let's talk about it. All right, we'll start by talking about the most important thing first, which are candles. You need to know what a candle is. You see all these green and red vertical bars all over the screen. Those are candles. Each one of those candles represents a certain amount of time of price movement. In this situation, it represents 1 hour. Each candle represents 1 hour of price movement. The reason each one represents 1 hour is because we're on the H1 time frame. All of these right here, these boxes are different time frames. Depending on which time frame you're on, that determines the amount of time that each candle represents. So this M1, that's 1 minute. This is the 1 minute chart. M5, now each candle represents 5 minutes of price movement. M15, 15 minutes of price movement. 30 minutes, 1 hour, 4 hours, 1 day, 1 week, and now each candle represents 1 month because we're on, the MN. But for our purposes, we focus mainly on the H1 or the 1 hour, the 4 hour, and the 15-minute chart. Those are the 3 charts that will be on the most. I'm going to actually go to the 1 minute chart in order to explain the anatomy of a candle. We need to learn what exactly is going on. Why do we see these skinny lines and then these green and red bodies? What's all that crap? Well, let's talk about it. The green, we'll just focus on, let's see, what's a good one? We're going to focus on this one right here. Actually, I'll do this one down here at the bottom since it's a little bit more, it's a little easier to see what's going on. The candle is going to have what's called a body and a wick. The body is what this green part is. The wick means that price was there sometimes. We can actually see, if you look at this candle, okay, actually, you know what? Since we're on the 1 minute chart, it'd be easier. You see how it just went to a new candle? That's because a new minute just started. So the candle opened right here. It went down. It's going down, down. Since it came up and you saw that little skinny line, the reason that skinny line is there is because it just shows that price was there at some point. So like if we went back here, this used to be red. It was red, 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 and then it came up. And so when it came up, that skinny line stays there to keep showing me that price was there at some point. See, like this one just did, it was down there. Now it's going back up some. So I have a wick to let me know that at some point during this minute, price was right here. If this candle decided to go up and up, it would turn green. If it go, see, as soon as it passes its start point, it turns green because now it's higher than where it started. Wherever it it ended at the end of the minute, the candle just ended and it pretty much ended right where it started. So that's why we don't see green or red. Now this new candle started, price is going up, so it's green. If it goes down below where it started, it'll be red. And then wherever it ends, if the end of this minute, if price is above where it started, it'll stay green. If it's below, then it'll be red. That's all it means. All right, so that's the anatomy of a candle. So once again, the wick just shows that price was there at some point, just like this one just did. It was up here. Now it's down here, but we have a wick letting us know that at some point it was up here. If you have any further questions about this, because I'm going to move on, just leave a question in the comment section and I'll address that. That's the most important thing. That's probably what I'll spend the most time on. Everything else should go a lot faster. Let's see. The next thing we'll talk about are these boxes. What's this blue box and this, what are all these rectangular boxes? Those represent sessions. Remember in the first video, we learned about Asian session, London session, New York session, These are simply boxes that help me see what session that was. The blue boxes are New York session. Every blue box is New York session. I know that these blue boxes are, going to show me somewhere between like 8 a.m. and 11 a.m. Or I think, well, since I'm Central Time, mine is set up for 7 a.m. to like 10 a.m. every day, something like that. And then the yellow or technically these are light gray boxes. It just looks yellow because it's mixing with the gray in the background. But these boxes are representative of the Asian session. So, and then the gray that's in the middle are the London. I just don't have a box there, but I know that's London session. So New York session is the blue, the gray is London, and then this is Asian session. That's all those boxes. Let me know. So if I scroll back in the history, I can always kind of tell what part of the day I'm looking at. Moving along, the purple, the gold, and the white lines, those are called moving averages. Each one represents a certain amount or a certain average of candles. So right now you see that white box that says moving average, and then in the parentheses it says 144. What that means is this line represents the average of 144 candles, where price was on average after 144 candles. The gold line is 50, the average of 50 candles. So, for example, so if I started counting from this red candle and counted 50 candles, then whatever the average of 50 candles is, let's say the average of 50 candles price was about, right here. That's why that's there. Same thing with the white line. That's the 10 candle average. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So on average, I guess this, just price would be about right here between, since it's up here where we are now, and then the 10th one was down here somewhere. On average of 10 candles, price would be about right here. That's all those are. It's moving averages. We'll talk about how those go into our strategies when we get to the strategy video. Just understand that those are moving averages. Next thing we'll look at is the let's see, let me scroll out. I'm gonna scan out a little bit. These dotted lines up here, these green dotted lines, that there's 2 on the top and 2 on the bottom. Those are basically oversold and overbought bands. We'll just call them bands. Basically what they do is they help me to see when price is oversold, and when price is oversold, that means it's been going down for a long time, and when it gets down into the bands, more than likely it's about to start going up because it's oversold. When it gets up into the bands at the top, that means it's overbought, and more than likely price is going to come down. So that helps me kind of see when I should buy and sell. Do not, when you see stuff go into the bands, when you see it come down here, don't immediately say, well, time to buy. If it's up here, don't immediately say time to sell, because they can go up there and then shoot up some more, and the bands move. So sometimes, like for example, this right here might have been in the bands initially, and then it came down, and then it came back up, which pushed the bands higher, and then this no longer was in the bands right here. Happens all the time. So, but there's a way that we use it, which I'll talk about when we get to that particular strategy, that'll help you not get caught up and get faked out and then like that. But that's what those bands are for. Let's see what else. Down here, let's talk about the stuff at the bottom. So the stuff at the bottom, these are oscillators. Let's look at the green line first. It works similar to how the bands are, where the green line, when it's above the top line, more than likely price is going to come down soon. When it's below the bottom line, more than likely price is about to go up soon. But there's something called divergence, which that's what we use the green line for mainly. So let's actually talk about what divergence is. Let me find a good example right quick. Bam, there we go right there. Okay, this is extremely important that you understand this. So divergence is basically this. The market is telling you that price is in a downtrend because we've got this here and this here. Well, price came down here and then it came up, okay, but then it came down lower. So to us, it looks like, well, price is still falling. But then down here, we're seeing the oscillator tell us here and then here. Well, check this out. If I take this line and go there, price is going down. But then if I take this line on here and match it there, well, that's telling me that the momentum of price is up. That's divergence. When the candles are showing you one thing, but the oscillator is showing you another thing, divergence is happening. So what I see here, and this is kind of going into strategy, but essentially in this situation, I would have looked at this and I would have said, okay, I see that price is in my bands telling me that it's got to start going up soon. And then on top of that, I also have divergence because my oscillator is telling me the momentum of price, even though it looks like it's down, the momentum is actually up. Well, there's two things that I see that tells me it's a good time to buy. I'm not going to go further than that because there's a lot more to the strategy, but and that's just going to be one of the strategies, but that's divergence. This shows you one thing, this shows you another. I can probably find another example real quick. Just to see. If I went to a different, oh, here we go. All right, here's another example, divergence. Starting from this point to this point, price was going down. But our oscillator shows us from here to here, the momentum of price is actually up. And as you can see, this, which I'll make it a little more visible, this point and this point, and then I'll make a vertical line here. You see they match. So the bottom of this is the bottom of this, same right here. The bottom of this is this point. So again, the candles show us price is going down. The oscillator shows us price, the momentum of price is actually up. It's in the bands again. Two things that show me, hey, you need to be looking to get into a buy right now. All right, so that's pretty much what the green line, that oscillator is. Then I have a dotted oscillator that I use for something else, which is really not a point to get into. We don't use the dotted line for divergence at all. Just understand, well, that's not gonna make sense till I get into a strategy video. So, but we'll get into that later. What else is on this thing? Okay, let's talk about these. We got the hard stuff out the way. So only other thing we really need to understand on these charts are, here's your pairs, your Forex pairs down here. The way that you find those pairs, which I'll actually go over again, because the next video is going to show you how to set up a demo account so that you can have these charts on your own computer. But I want you to understand what all this stuff means before you get a chart on your computer. But the way that you get different, like let's say I wanted to trade a new pair, I would click this box right here with the green and the red arrow, click that box, all my pairs show up. And that's what I don't trade too many things, but well, I trade a lot compared to a lot of people. But let's say I wanted to trade EJ or the Euro Yen. You right click on it and just say click on chart window, and then that's going to pop up down here. Your charts are always going to pop up like this, and then you can go to this box. This is your templates box, and I'm going to give you my templates in the video where I show you how to set up a demo account. But once you get the templates, all you'll have to do is click on that box, and then the template that I give you, you can click on the main chart, and then it'll make your chart look exactly like mine. And you'll have all this stuff. Let's see what next. Oh, this box right here, this vertical line, I'm sorry, this horizontal line tool, this is important. I mean, all it does is it lets you draw horizontal lines. You just click somewhere and draw. And the reason we use this is for what's called support and resistance. Support and resistance is basically where, okay, you see how where I just drew my line is right under this cluster of candles. Price keeps rejecting this point. It hit this line, it's hitting this line, it's hitting this line, and it's bouncing off of it. Then it's coming up, and then it comes down, and instead of hitting it and bouncing back up, it just shot right through it. Well, normally when that happens, whenever you see a bunch of rejections right here, this becomes, let me highlight it like this. These candles become a level of support because it's supporting these candles. But once it breaks through that support, normally what happens is price comes up to that same spot and then it starts bouncing off it this way. So now this same level that was support is now what's called resistance. So that's support and resistance. So now it's likely going to bounce, and then keep going down. It happens lots and lots. Here's another crap. Oh, okay. So let me just go ahead and tell you what this button is. This button, if I try to scroll right now, it's gonna make me come back to the beginning. Like it automatically did that. So in order to not, if I just want to scroll as far as I feel like scrolling without it automatically knocking me back to the beginning of my chart, then I just click this button to turn off the auto scroll. But I just wanted to show you another example of support and resistance. Okay, so here's one right here. Notice how price came up. It kind of, you see it wicked through this line, through this support area right here, but it kind of stayed right below it, came down, came back up to it, didn't pass it, like it didn't close past it. It wicked past it, but price never closed past there. It came down. Now, what did I just tell you? It's going to break through and it's going to revisit that same area on the other side. And I actually just said support. I'm sorry. This is resistance right here. If the price action is happening below the line, then that means it's resisting. And when it breaks through and then price activity is going on above the line, that's support. So just think about it like if price is holding something up above, like it's holding it up, it's supporting it. If it's keeping it from coming up, it's resisting it. That's the best way I can think of to just explain, how to remember, oh, is this support or do I call this resistance? But anyway, it resisted, it broke through, supported, it kept going up. So that's how we use, or what we use the horizontal line for the most part. There's something else I use it for as well, but I'll go into that when we get the strategy video. Just know that you'll need to know how to find that horizontal line. Next box we need to focus on is this Fibonacci box. This is simply just understand that you just take it, you draw it from one point to another point, and it's going to give you percentage levels. These over here, this 38.2, this 50, this 61.8. This is something I rarely use it. So not a big deal. We'll get to it more so when we get to the strategies. Just know that there's something that we do use. This right here, this rectangle box, I use this to identify areas similar to support and resistance, but it's just something that I use it for a little bit differently, which is more so supply and demand. Again, very similar to support and resistance zones. I'm sorry, support and resistance, but just know how to find this box. This rectangular box is something that we'll use. If you want to zoom in and zoom out, of course, that's pretty self-explanatory, so I'm not even going to click on those. Let's see what else we talked about that. Oh, I know what else we need to know. All right, this box right here. Now I'm on my demo account, so I don't care if you see my information, but this box right here, if you click on that, it's going to pull up this white area down here. This is where you can see your total balance that's in your account. And so if I get into a trade, which here's something else you want to know, you can't see it right now, but because I haven't clicked on it yet, but this little white arrow, just click on that, and this will pull up your boxes where you can enter a buy or a sell. So going off our last video, we talked about lot size. This is where you enter your lot size. Let's just do something crazy. So this is a demo account. It don't matter. Let's put in 50 standards. So remember, whatever I put in here, we have to multiply it by 10 in order to understand how many, how much per pip. So 50 standards is actually $500 per pip. So $500 per pip. Let's just sell it. And so I just click on sell, and then a white line pulls up here that shows me that I'm in a sale for 50 standards. This white line is exactly where I got in. Down here in this white box, this equity, this is where your equity shows, like if I were to get out of the trade right now, this is how much money I would be left with. Whether it's less than my balance or more than my balance, this is where I see what I'm going to be left with. The margin, I'm not even gonna lie, I really kind of don't understand what margin and free margin is, but I do know that margin level, basically if this gets the higher the number right here, that means the better your risk management is. So this means, and anytime the margin level gets below like 100% or something like that, then you're doing pretty bad. It means you're risking way too much money and you need to chill out. And so you want your margin percentage to be, a bit higher to show that you're having good risk management. And then of course your profit amount is over here. Now, if you don't want your dollar amount to show, then what you can do is right click where it says profit, and then click hover your mouse over the profit thing, and you can say as points. So now it shows a negative, well, basically -1 pip. And I know you still see the dollar amount right here. Well, I can just kind of hover your mouse until you see the arrow do like that. You can click and then just drag that down. And I mean, you can hide that if you want to, or let's say I get into a bunch of more sales. I'm gonna change this to 10 cents per pip. And I'm just gonna enter a gang of sales real quick, just throw a couple of buys in there. Why not? All right. Well, I can't see all of what I just got in. So I would just take this right here and scroll this up in order to reveal all the trades that I just got into. And let me change this back to dollar amount. Okay, so here's the thing. I do work off of 2 different templates. The first template is the main template. This one right here. This is the main template that I use to work off of. However, I also have a different template. Everything I just told you is the same for the most part, except for the moving averages, just they're different. They represent different averages. So, but you know what a moving average is in general. The session boxes still show me, I know all my blues are New York, my grays are London, and then this one is Asian session. I know that this down here is going to show me, represent divergence type stuff. The candles are still the candles. Everything else is, it's all the same. So, but just know that you'll have 2 different templates, and but once you understand this one, you can understand pretty much any of them. So that's the breakdown of a chart. The next video, like I said, I'm going to show you how to create a demo account, and I'm going to give you access to my Google Drive, which is going to have my templates and the indicators that I use, because some of these indicators are not in the default MetaTrader 4 platform. So, which that's what this is. This is MetaTrader 4. So anyway, I hope you understand all this. If you don't, you have a question about a particular section, just leave a question in the comment section and I'll answer it. All right, y'all, till next time.